All right. Good morning, everybody. Hopefully you had a nice long weekend. UK is down more than 1/4%. We're still getting data out of that. Hong Kong also down near 1/4%. Keep an eye on small caps. They're leading this morning. Could see a little bit of a capital rotation. Maybe some more of that short covering rally. It's going to be a weird day when it comes to the data. Uh, Later in the week, we're going to get data that's going to go to the heart of whether or not the Fed is going to change their rhetoric. We're still looking for any indication that they're going to push back on the rate cut that is priced in. Right, that's our focus right now. They keep dangling the carrot of at least one rate cut, looking to see if they take that completely off the table or not. We have auctions in the front end. I know these don't show up as a high impact, but whenever we have auctions, you want to pay attention to when they're going to be coming through, especially the ones, not even especially one, just keep track of those auctions when they come through 11, 11:30, and 1 o'clock. If it doesn't show one for 11, but it shows 11:30 and 1, just go ahead and assume there's going to be one at 11. As I've mentioned before, these different websites combined still don't show every single economic event. And you would think that they would cover everything, right? But even some of the biggest economic events don't show up here. Case in point, the QRA, 4 times a year, actually 8, since there's 2 events for QRA, right? There's the Monday event and then the Wednesday event. It never shows up here on any of the economic pages that we look at. So if that's not on here, what else isn't on here? Rather than trying to find every single economic event possible for around the world, just watch the clock. We're still waiting on the spot gamma founder's note for the morning. So we don't have a lot of clarity on this put wall, but rolling up that put wall to me is a bullish behavior, just seeing that it's been rolled up. But that also puts it above the 0 gamma and right in the range of the volatility trigger. So kind of want a little more information on this from them. I was hoping they would publish their report before I started, but no luck there. So we'll just wait for it to come out. Once it comes through, dig into it, see what they have to say about bringing this put wall up. It's not just the fact that it's rolled up, right? It's really these other 2 levels that has me kind of scratch my head. But until or unless I see something from them that says otherwise, I'm going to see this as a bullish behavior. The call wall at 5,400, it's a long ways off. If we were to consider that any sort of resistance, it's nowhere near us at this point. So nothing we have to focus on at this point. Right, holidays always screw everything up. You want to lump all of this data from our Globex yesterday with that small time frame trade and the Globex from Sunday, put it all into one piece. The tool won't do that. But really, this is the range that you want to focus on. We'll just match the floor pivot from Friday. So we've got an inside channel range. It's not a narrow channel. It's more narrow than Friday, but that's not saying much. So when it's a narrow channel, the channel can be so narrow, we wouldn't even see any yellow at all. Wouldn't see anything more than that purple line. That's as narrow as it could get. So it's not that narrow. But when we have, a narrow day, we have the possibility of an expansion day. And when it's a big, wide channel, we have the expectation of doing nothing more than really just chopping about. This purple line running through at 53.20, that's the pivot point for the week. How far away we are from that pivot point. It's kind of like reversion concepts. We're not too far away. We're basically right on the line. Generally, when we're above it, we're bullish. When we're below it, we're bearish. But we haven't really gone anywhere yet. So sure, we're above it, but we don't have that bullish bias yet. If we were to make another higher high past these other two higher highs, then we could look to really expand farther away from that weekly pivot point. Take last week for an example. This was the weekly pivot. Kind of got a bit stretched, got too far away from it, came back to it. Little mean reversion. Same thing, too far away from the pivot. We kind of stall out, really just stop going any farther. It's no different than a weekly range or a weekly expected move. So this morning, we've already interacted with the R1 level. If we had opened above the R level, then we'd have the expectation of it acting as some form of support at least once. But we're still underneath it, unable to get through it. At this point, that makes the floor pivot the magnet. We would look to break our own Globex low, break the RTH low, test the Globex low, and tag that. Just keep in mind, if we base this whole thing as one data point, like I mentioned a few minutes ago, then really we want this to be our own Globex low and just treat all of this data as one collective Globex. So then we can measure the whole thing, mark the half back, the 50% mark. We'd still need to break that, test this low. Then we would focus on Friday's data. Coming down and tagging this floor pivot wouldn't make us bearish on the day. I mean, sure, it would be a bearish move to get down and get to that, but it wouldn't change our bias as a bearish bias. It would just be getting the pivot point tagged. Markets want to hit that pivot 80% of the time. So, base case argument, we're going to hit the pivot point. We got closer to the ADR on the top than we were to the bottom. Think about from where we open, split the mid. If we continue to hold this 53.27, then we're going to continue to focus on this R1 level, get through that, and get to the ADR half. Volume looks good this morning. We've got an 80, considering what we were getting last week in the 60s and 50s. 80s looking good as a start. And there's no hedging yet this morning. Really isn't anything for them to hedge against. 10-day, 30-minute volume profile with TPO in blue throughout the day today. As long as we don't break this low, 52.75, then throughout the day and throughout the week, we're going to continue to lose the lower end of this profile, and that will narrow everything up. On this time frame, it's really easy to see the restriction that we've got to deal with, right? This really big event right there. So 53.21 is the half back. As long as we've got that, then we're going to keep the bullish bias. So this is the inside week that we're focused on. This last week. 53.33 is a cog line. It's also this high from back here. This selling zone, every time we get up into that 53.30, it gets sold into. We still don't know how much liquidity is up here, but we want to keep our eye on it. See it on the dome, right? You can see it in the active trader. If you've got something like Jigsaw or Bookmap, you'll see those structured levels up there. And of course, pulling and stacking. If this is where there's a wall of sellers, then it's not to say that we can't move up into it. Just that as we move up into it and start to fade back, we want to see those levels get refilled, right, on the dome. So 53.32 cog line. It's also this high. 53.21, half back from last week. Puts us in this very narrow little channel here. And even if we do get that breakout, we've still got 53.68 to deal with. It's still pretty shallow back here. We didn't leave much behind on that move. But we've got this high volume node in that 53.20 to 53.50 zone. That's the channel that we're in now. I'm going to carry this point of control up from yesterday, but really this isn't going to have a lot of weight to it. $53.20. It's an untouched point of control, so we'll carry it forward. But really, you want to take all of this data combined, just treat it as one day. We're still a 0.5% above the 10-day, working our way back up from the tag of last week. So we're not overbought. We're not overextended. We haven't moved too far, too fast. None of that language applies. And we're still less than 2% away from the 10-week. So we're not back to our normal resting spot. That's where we've been most of the year. This is looking all the way back to December, right? So I'm trying to keep it on a really short time frame here, just showing this year really. For the most part this year, we stayed above that 2% line. So we're really just looking to get back into our normal rhythm, get back above that 2%. We are on the decline here. Remember, we don't have to go back to that 10. All price has to do is just stay sideways. The 10 will come to us. So last week we looked at this range, but it wasn't set in stone. That happens Friday at 4:15, something like that. So now that we're in the new week, it's locked into place. We can look at the current week's range, compare it to last week, and see if the range got bigger or smaller. This range is derived by volatility. Trading activity within the options chain gives us our expected move, high and low, and then we plot that out here on the chart. Now this is a static expected move. It gets locked into place. It doesn't change once we've set it. If there was more volatility for this week, the range would be bigger. And if there was less volatility for this week, the range would be smaller. You have to keep in mind that this is a 4-day week and the range is still as big as last week. So while the range looks the same, the fact that it's covering less days means that there's more volatility priced in for this week than there was for last week. Now you can always use the dynamic expected move. Go in and look at the options chain for Friday. When we were looking at this Friday morning, it was like 67, maybe 69. I don't remember exactly, but it's down 20 points since then. You can mark that every single day if you want to, right? Rather than doing it once a week. That dynamic expected move is all just a function of math, right? It's you can do one day only, to the expected move for the entire week. All right, Bitcoin is down this morning. Nat gas and more Bitcoin. It was up yesterday a little bit. So very likely just a little bit of a mean reversion. Things that are up: semiconductors, gold, well, gold miners, solar, which kind of ties back into those China ADRs, more semiconductors. The FANGs are up this morning, or the MAG 7, uranium, retail, and it's just not quite there yet, but a couple more percentage points, and we'd be looking at KWEB up this morning too. And we got a big gap up in silver, so we're going to expect gold to come up too. Getting a little bit on the pot stocks this morning too. That can tie in with the Russell doing a little bit better. Maybe a little bit of the short covering rally too. So on the China ADRs, we got an inside day breakout, but it's already started to fall back down again. Probably going to need a little bit more time. This can line up well for BABA, Baidu, JD, PDD, XPEV, NEO, EDU. So we've got a little bit of a rising tide, but we want to see this broaden out a little bit more. Specifically, some financial names and consumer discretionary names. XLF, XLY. Generally, you're just not going to see those, the XLY move around much in pre-market. Get algo prints more than anything else. So we got NVIDIA with this really large gap up this morning. You know, a weekly gap up, typically we'd say a Monday gap up, but with the holiday and everything, today's like a Monday in that regard. A weekly gap up is really bullish. The problem is this is a weekly gap up from the highs after 3 really big expansion days. And so the concern is that this is an exhaustion gap. You know, gaps are not all created equal. There's a gap and go or a breakaway gap, and then there's an exhaustion gap. typically a big gap up like this when we're already at the highs after 3 really big days, this would be considered very likely an exhaustion gap. The thing is, we don't know if it's an exhaustion gap for sure until it falls back down. So you don't want this thing to fall back down. You don't want that gap to be closed here, because if it's a gap and go, it should do that. It should gap and go, not gap, come down and close the gap, and then stay bullish and run back up and keep running higher. That's not what a gap and go is. So the line is already set now. It set it in the pre-market. I wouldn't want it, if I'm going to take this bullish play, I would not want it to get lower than the low it's already set in the Globex. If it does come lower than that, say it gets to the after hours from Friday, I wouldn't call that bearish. It would just take the gap off the table. And I have a very bullish bias if we have a gapped up Monday and it wants to continue to run higher. To me, that's awesome. It's perfect. It's bullish. So if it closes that gap, I'll take that bullishness, that bias off the table, but it still wouldn't make me bearish. This is where we gapped out or broke out of from the earnings. We'd have to get back inside of that zone to even consider being bearish. $10.83 is the 50% measured move of this pullback. That's very likely our next support level now, because if you see in the pre-market, we're above that 10.83. So this needs to be support that holds. But if it does hold that, then 1150 is not out of line. Running it quarter by quarter, 1100, 1125, 1150, just level by level. But it needs to keep this gap up. And of course, if NVIDIA can keep that, everything else is going to be bullish too, right? The rising tide that NVIDIA creates will look it to spread out. See the other sectors start to rise up. So those China ADRs like BABA, we held the half back here, which looks good. But holding the half back really is just a starting point, right? It still needs to run back up, break out the high, continue to expand. So a lot of work to do from that front. Just holding the half back is, it is a good start. We're IX10, but we're inside of a very large range. So there's not a lot of excitement about that IX10. And even if we do get the breakout above 8250 for a TRB, it still only owes us back to 90. Still, it's not a bad move from 8250 to 90. And then, of course, there's the half back to deal with. Looks like it's around 85. So a lot of work to do if you're going to try to trade BABA And that's if it can hold the half back at 81. If I do inside day breakout to the downside, at least it's trying to recover and get back in the zone. But this has just been a beat down. And sure, we could get a little bit of a rally back up here, more of a dead cat bounce than anything else. This thing is broken and busted. It's just nasty. We don't know if the selling is done yet, but seen a lot of selling around that 155 and up. Seems just like, we just keep getting that sellout. PDD, this is pretty rough. But we have kept that 150 breakout. That's the zone that really was the concern. If this was going to turn into a cup with a handle and then break out or not. We got the handle. We got the breakout, as ugly and violent as it is. So we'll just use this fib that was sitting here. There we go. 75 is the 50% mark of this cup and handle pattern. That'd be the 175 is the first goal. We'll worry about the next one if we can get past that 175. So it needs to keep the breakout, stay above 153. And if it can do that, then as ugly as it looks, 175 is still on the table. Over the last 5 days, solar has moved more than 12%. So I'd be careful on that. I know it's up again this morning, but it's going to get a bit stretched. And over the last 5 days, the China ADRs through the K-Web is down more than 6%. So a little bit of mean reversion there in the other direction kind of makes sense. Those are the two extremes. With the Bitcoin up this morning, some of the proxies should also be up. Riot, Mara, Hut, Hive. Bitcoin was up yesterday, so now that we're getting a bit of a pullback, they should be pulling back. So Bitcoin, yeah. Riot getting a little bit of attention. Mara, Coinbase might be worth keeping an eye on. It's not the only one, but right up against this high from last week, we kept testing that zone. This would make for a really nice breakout. 10-point move from 1038 to from 238 to 248. Otherwise, a breakdown not really exciting can get us back down into that 220. Kind of keep your eye on the dollar today. We're under the 10, we're under the 3. We continue moving to the downside here after breaking 105. And it's not tick for tick, right? It's not the idea that the Dixie going down would make the ES go up. It's more the idea that with the Dixie going down, a weight is removed from the S&P, from the NASDAQ. And if they want to go up, they don't have this holding it back. All right, so we're into the halfback. Keep an eye on 104. If we break 104, then I think that as a key level, we could see a real shift across the equity space. But we got to get the breakdown first. Don't really have a lot in the 10-year yet, other than the fact that we're going sideways here, 4.5 to 4.4, 4.42. So no sudden movements in either one of these two. News on Riot. Riot said to pursue takeover of rival Bitcoin miner Bitfarms, BITF. That's timely. So keep your eye on BITF, M&A play. And of course, that should hit Riot the other way if they're going to spend money. That's what I got for you guys. It's kind of a boring start. Keep your eye on the advanced decline line. You're looking for that rising tide today. Otherwise, we have Bitcoin and gold miners. It's really just a slow start. Solar, semiconductors. We need it to broaden out, right? See y'all tomorrow.